Welcome to TradeTheMBI.com. This challenge report is for the 3rd of November. And, well, they got there faster than even I expected with the move to the previous algo level at the 43.22. And it was a pretty strong move, pretty consistent with everything that we were seeing from the spike up, and that pretty strong relative to what we get when we get this kind of dip from the DOC. Sustainability becomes a question now that you're, 48 on the MBI Magenta. Of course, it takes a lot longer for it to move below the 33 level. And given the fact that we're, right at the point where, new fund money comes in at the start of the week, perfect timing for the start of the push. I mean, you forced a lot of short covering, and the question will be how much short power there really is right now. And if it's covered already, then it's going to take new buyers to really continue to push it. And of course, it's going to require that news stays neutral, at least from a world front. Economically, the softness that we're seeing is a bolster to the market because I think it causes the Fed to back off and or ease. From an NQ standpoint, much further along, so already reached its 50% move within that, and even its MBI reading is a bit stronger because it's not as accelerated, and certainly Magenta leading the red in this particular case, and the strong move of DOC green over cyan. That was always the critical one because once that crosses, usually you get that strong momentum. Now the only question becomes a turn back, and of course now you're seeing the beginnings of potentially DOC steel fading, so there would be short-term buyers fading, so there would be mid-term, long-term buyers really kind of taking over at this particular stage. Did create a positive extreme on the daily for NASDAQ there, so that low will be the beginning test of any retrace coming back into it. From the treasuries, you can see the flight out, so that pushes things back towards where a normalization of where the Fed is, and the market, like we were talking about, had gotten so far ahead of where the Fed was. Now with the softening situations, some of that premium being given back. From an oil standpoint, just pushing right back into that low 80 range. It's fairly comfortable. I mean, the mid 70s was tolerable, but still, this is elevated, and it's going to have a CPI effect going into the future. So we'll see how that starts to play out. Of course, that bolstered the euro and the softness from a U.S. standpoint, giving them some cover there. So that helps, and particularly oil being softer. But any jump in oil, again, is going to put another downside pressure on it. So it just becomes this back and forth. Gold, pretty muted on this move. Surprisingly, you would think that there would be a lot more acceleration. Same with crypto. Wasn't a whole lot of excitement, despite the fact the market was moving strong. So everything was moving into risk asset and away from the protection zone, which most people are going to view Bitcoin in that now as the hedge setup, as well as ETH in that, as opposed to just primary investment construct. And that kind of faded after all the scandals and everything. And of course, we saw that Sam got convicted for his role in the whole crypto situation there. And, again, that weeds out a lot of the negative things and, kind of opens things back up to a bit more normalization as you reduce fraud, and that people get a bit more confident. Of course, there's always the specter that, somebody else is doing a similar kind of thing. From a 50K standpoint, you can see the start of the day really began with positive extremes and literally throughout, and it was just nonstop. And that all started from the MBI cyan under red that began a couple days back. They're in the middle of it as we had that turn off of the slight fade, and that was just straightforward up move, and we can see it from intraday. And it's always important to look at this when these start here, even from a 5-minute chart here. We're looking at that MBI cyan underneath, and then once you get this consistent run of DOC steel under the red, and it usually remains in that lower case down there, as long as it stays in that zone, you get these pretty strong moves, and then usually it evens out and get some minor softness within there, but overall it pretty much stayed red DOC fairly well below the red line throughout that, even on a 5 minute. And of course, it was pretty clear from a 50K that there was no change whatsoever in that. Now here we are in the post market, getting a little bit of fill back into some of that previous action, nothing major. And when you get the kind of a move, you can expect as much as a third to a half back into the rally. So that's really going to be a gauge of how strong things are. If we don't see that kind of retrace, then it'll really mean that shorts have run from this, happy with what they got from the initial move, and have waited until they get their next opportunity to attack the situation. That could be a little bit of a while. Just to really, I think it's going to a lot depend on if something happens on the world scene. Otherwise, things are rather neutral to weak from an economic standpoint, which for a market stand is not bad. Just provides a better opportunity to stay active and get a better return than they're going to get from anything else, or at least their belief is that they're going to get a better return than they will from where treasuries are at, which still I think is going to be a tough sell, because at the end of the day, that secured yield versus the risk assets is going to be problematic. But as we get towards the end of the year, of course, you're going to get a lot of catch-up trade for those that were a little too risk adverse, and now with the discount that was provided, I could see that there would be some that would see that as a great opportunity to jump in. But as always, we'll continue to follow the charts and our readings. As always, though, trade well. We'll look for me on Skype chat. Have a good one.